am Kim Snyder, and thank you so much for joining me for the Sane Crypto Podcast, the first cryptocurrency podcast for baby boomers investing for retirement. Most people believe that crypto assets are too risky for the average investor. I believe the risk is in not investing, and in fact, that cryptocurrency may be the answer to near retirees' prayers. The trick is to structure our investment so that if the naysayers are right, we don't do irreparable harm to our nest egg. But if the believers are right, we make potentially life-changing money that could catapult us across that retirement finish line. The Sane Crypto Mastermind is my signature program for those who can't, won't, or don't have time to figure this all out and keep up with it on their own. If you would like to learn more about how to do that, then I'd encourage you to join my free online training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further at sanecrypto.com/retirement. Now, if you've ever had cryptocurrency explained to you, you know it can get kind of dense, sitting as it does at the intersection of finance, economics, and technology. But it shouldn't be. They say you don't really know a topic until you can explain it to your grandma. So it is that beginner's mind I tried to bring to the table when I was interviewed several weeks ago by Katie Welsh and Denis O'Brien of the Chain of Wealth podcast. We had a really great conversation, so much so we just kept gabbing even after the interview was over. Because I was really interested to hear how they understood and thought about investing, being part of the millennial generation, I being a baby boomer. Turns out that they kept the tape rolling, and they included that part of the unscripted conversation as bonus material. So in the regular interview, we talked about something that most people don't know about me. Very good icebreaker question. How I would explain cryptocurrency to someone who's still unclear on it. What is the difference, if any, between cryptocurrency and a crypto asset? How big is the crypto asset market? What other applications does blockchain have beyond cryptocurrency? If someone wanted to invest in cryptocurrency, what should they look out for? My book and podcast recommendations. And then there was that unscripted bonus conversation about millennials' differing views on investing compared to earlier generations like mine. And they have been kind enough to allow me to share that interview, first published on their podcast, again, the Chain of Wealth podcast, with my listeners as well. So without further ado, here is me being interviewed for the Chain of Wealth podcast.
Welcome,
Hey,
Kim.
Kim.
Hey, y'all. Thanks for having me. I'm so excited to be on your show.
Yeah. Wow. You have really done a lot in your 20 years with your engineering and your author and speaking. And what has that been like?
People say that to me a lot. And it's funny because I don't really think of it that way. I just think of it as, life. But it's definitely been a broad range of experiences with lots of stories to tell.
Definitely. I could imagine. So you probably have a lot of your life out, on your podcasts and everything that we'll talk about in a little bit. But what is something that most people don't really know about you?
That I'm painfully shy. So
Really?
When they hear all those things, they assume, they see that I, speak in front of thousands of people and, do all of these things. And they just assume that, I must be an extrovert. But the opposite is true. I am painfully shy. It's funny because I feel perfectly comfortable in front of 10,000 people, but put me in a room of a few people, 2 or 3 people that I don't know or, have to make a cold call on the phone, oh my gosh, I'd rather stick pins in my eyes.
Really? Wow. You don't hear that every day. Did you?
I think that's actually a lot more people than what you realize, though. Especially when it comes to speaking and stuff like that, it's a completely different sort of aspect when you're dealing with a smaller crowd.
I think that's right. There's this idea of like the extroverted introvert. That's probably me, and I'm sure you're right. I think probably a lot of people, you'd probably be surprised at how many people are out in the public and yet are probably introverts.
Yeah, definitely. So we did an episode on cryptocurrency quite a while ago, but for anyone that's still a bit unclear about crypto, could you give a brief explanation as to what exactly it is?
Sure. So I think that the explanation is going to depend a little bit on whether you're talking to a hoodie or a suit. And what I mean by that is that the technology, right, and the investment are two different things, and most people conflate the two. For example, it could end up being a really successful technology, but a terrible investment, or vice versa. So I'm going to explain it to you both ways, okay?
Okay.
The way that I explain it to my family is like one of those old standardized test questions, which is internet is to blockchain as email is to Bitcoin. So here's what I mean by that. Blockchain is the technology underlying all cryptocurrencies. And it's just software, right? Just in the same way that the internet is software. And just as the internet protocols like HTTP and FTP and TCP/IP, all those things gave us the ability to transfer data, i.e. files and music and videos, images, etc., around the globe in the blink of an eye in a decentralized way. Blockchain gives us the ability to transfer value anywhere around the globe in the blink of an eye in a decentralized way, meaning like peer-to-peer, person-to-person, without relying on a trusted intermediary such as a bank or a government in the middle. So it's basically the next iteration, the internet of money, if you will. Now, so that's from the hoodie. That's the technology perspective, right? The investment perspective is this. This is what the suit would tell you. It's, that internet was this obscure technology back in the day that no one really understood or knew what to do with, but, back in the mid-90s, until AOL started mailing out millions of CDs via snail mail, which seems very quaint today. And suddenly email became the killer app that opened the floodgates to widespread mainstream adoption of the internet. Before that, it was just, everyone thought it was a toy, basically. Well, today, blockchain is the new, obscure, potentially disruptive technology, and Bitcoin is the compelling use case that's starting to drive widespread mass adoption today. Now, whether Bitcoin eventually becomes as ubiquitous as email remains to be seen. But the question is, from an investment perspective, is if someone had created an investment back in 1993 that you could buy and sell on an exchange like a stock, that allowed you to bet directly on the future success of the internet more and generally and email specifically, knowing what you know now, would you take that bet?
Of course.
Would you? Of course, right? 2020 hindsight is a beautiful thing, right? Of course we would. That'd be amazing. Now, we don't have the benefit of 2020 hindsight on Bitcoin and blockchain yet, but there is an investment called Bitcoin, right? That you can buy and sell on an exchange like a stock that allows you to bet on the future success of digital currency, specifically in blockchain more generally. And so the question for investors now is, knowing what we know now, should you take that bet? So that's the two ways to look at it.
I must say, I've read up quite a lot about crypto, and that was probably one of the best ways to explain it. So
yeah, thank you.
I have to commend you.
I almost understand it. I'm not even going to lie. Like, I still kind of struggle with the whole idea of it, but I kind of understand it a little bit better now.
So I have to ask, which side on the fence are you on right now? Are you more sort of like the suit, or are you the hoodie right now in terms of the way that you see it?
Yeah, I'm totally the suit, which is probably not surprising given my background as a, financial advisor and financial engineer. It's interesting because I sometimes, I often shake my head at the people who get so tangled up in the technology aspect of it that, they can't separate the investment from the technology, because they are really two different things.
Yeah, definitely.
So real quick, before we go any further, can you tell us, is there a difference between cryptocurrency and crypto asset, or like what is that there?
Sure. Yes and no. So the original terminology was cryptocurrency, and that came from the original creator of Bitcoin. When he wrote the original white paper, they referred to things like, digital cash. And that was sort of unfortunate because it created this terminology around it that's really been kind of baggage, about currency, because people get the idea that, it means we should be able to go out and buy pizza and beer with our Bitcoin. But really they were trying to describe something that they had no idea really what it was going to become, any more than really, Tim Berners-Lee probably knew what the internet would become 20, 30 years later, And so the cryptocurrency name is too narrow and specific. And so what's happened is, over time, a few people have started to push to rename it, if you will, into something called crypto assets. And because that more accurately describes it as an asset class that can then be broken down into different subcategories. So depending on who you're talking to, most likely those two phrases are being used interchangeably, unless you're talking to, someone, at a venture capital fund, and they may use cryptocurrencies to refer to a subset of crypto assets, but generally people use them interchangeably.
So just so I can be clear, I'm just going to kind of repeat what you just said to make sure I understand it. So basically, cryptocurrency was like the old-ish kind of way of talking about it, and now it has kind of morphed and changed, and now the more appropriate terminology is crypto asset.
That's right.
Oh, okay. All right. I'm good now. We can go on.
Awesome. So in terms of currency, like, I know you said that there's been a push to sort of move away from that kind of terminology, but ultimately, like, I think a lot of people do still see it as that, and if you jump onto Google right now and you type in Bitcoin USD, it's going to spit out a value as if it was a currency that's living and breathing along with, like, the pound as an example. Do you think that widespread adoption is going to happen anytime soon?
Well, so the issue is that there are right now over 1,000 different crypto assets. Okay. And maybe 2,000. I don't know. We've lost count of how many have been created. And you have to make a distinction between them. The vast majority of them will end up going by the wayside, in the same way that the vast majority of .com companies did in 1998, 99, and 2000. one or two will survive and probably become iconic and, widespread adoption. But most of them will not. So when you say, will cryptocurrency be adopted? It just, it depends. Now, I'm a pretty big believer in Bitcoin being the one that I think, is the safest bet and the most likely to be widely adopted in the short run. However, not for paying for Starbucks and pizza. The investment thesis on Bitcoin actually is not as digital cash, but rather digital gold, that it will replace all the people who hold gold as a store of value, which is, trillions of dollars, that some portion of that will flow into Bitcoin instead, because Bitcoin's a better gold than gold. And that when it does that, just because of sheer supply and demand, one of the things a lot of people don't understand about Bitcoin, for example, is that there can only ever be 20 million, 21 million Bitcoin ever. And so if, $1 trillion of gold money comes into Bitcoin, divided by those 21 million coins, the only thing that can happen, since government, you can't print more like the government does with our dollars, is the price goes up. And so when you're buying Bitcoin as an investment, that's the bet that you are making. And because there's only 20 million, and because there's so much gold in the world that could potentially be replaced with Bitcoin, the potential for returns that are just crazy is like nothing we've ever seen before. The flip side of it, however, is that that might not happen. That's the bet. Maybe it does, maybe it doesn't. If you put a gun to my head, I think it does. But nobody really knows for sure. So that's kind of the, that's the investment thesis, really.
It's very interesting. And sort of towards the end of last year, there was a huge amount of mainstream media about, the price of Bitcoin reaching almost $20,000 and, will it get to 1 million by the end of 2020 and a whole bunch of stuff. And sort of more recently, it's gone a lot more quiet. The value sort of went down quite a bit.
Yeah.
But how big is the crypto asset market right now?
Yeah. Relative to public markets like the stock markets, for example, it's just a little bitty, tiny guppy. In relatively speaking, it's like 300 billion in market cap right now. And, the US stock market is trillions worldwide. It's many more trillions. So yeah, it seems it's this, very constrained supply, which makes it go, up and down, and the potential for these big, you hear these hypey numbers like $1 million and you think, well, that's ridiculous, but it's actually possible, which is the crazy thing. Not a foregone conclusion, but possible. So yeah, if even there are, reasonable arguments that if even a small amount of the gold holdings was to transfer over to Bitcoin, then, you could see some astronomically big numbers, and, that market cap would get a lot bigger.
Oh, all right. Well, so talking about blockchain, going back to it a little bit, what are some other applications that the technology for blockchain can do? Mm-hmm.
Again, so this is one of the things that is, well, first of all, I think it's a little bit different about how I approach this from other people, and also maybe different from some other investments. So generally, when you have people talking about cryptocurrency, they are either bulls or bears, right? They either will tell you that it's the greatest thing since sliced bread. You should put all of your money in it. It's going to change the world. It's going to cure cancer and hunger and world peace and all of these things, right? And then you have other people who say it's going to go to zero. It's ether, it's vaporware, stay away, it's a scam, it's a pyramid scheme. Most people are pretty extreme on one side or the other. I actually, and this is part of my investment philosophy in general, I work really hard to be neither bull nor bear, but to be an owl. I try to say, okay, and I am going to answer your question, Katie, I promise. But like I try to say, all right, let's just imagine that, because the truth is nobody knows what's going to happen. Okay. The same is true of the technology. Some people think blockchain is going to revolutionize all of these industries, banking, finance, healthcare, logistics, etc. Right. That it's going to be the next internet, and other people say it's going to be a flop. And the thing is, you and I, we can't know. They don't know. They have no idea any more than someone knows what the stock market's going to do. It's all a guess. So what you have to do is say, well, if nobody knows what the right answer is, but there is this once in a lifetime potentially investment opportunity. So here's what you have to know. Last year, the return on Bitcoin was 1,044%. And that's after it came back down from 20,000 to 10. Okay. Like 1,000%. The US stock market over time makes 8. So if my goal in life is to produce enough a big enough portfolio that I can do what I want when I want without having to worry about how to pay for it, which is my definition of financial freedom. I think probably yours as well, right? And I'm typically trying to accumulate those assets at a rate of 8%. And there's the possibility, albeit, even if it's 50-50, a coin flip, that in 10 years, this thing could go to hundreds of thousands of dollars per Bitcoin, which it could if this all came true. Like, how do I structure an investment in that? How do I take advantage of that in a way that I get some of that upside, because it's a once in a lifetime opportunity, but I don't get wrecked, because I mortgaged my house and, did all these crazy things to invest in Bitcoin. You see what I'm saying? Mm-hmm. So back to your original question about, what other applications are there? Well, a lot of people are talking a big game at this point for a lot of different applications, right? All of those things: finance, healthcare, logistics, banking, etc. And maybe that's true, but nobody knows yet, because so far nobody's built any working, businesses other than Bitcoin. So, it remains to be seen. And so that's one of the tricky things about this as an asset class, is that it's new. We've got very little data to go on. And so it's new with this, just crazy return potential, so it's a very unique opportunity, but also a very unique investment. And a lot of people stand to make a lot of money if it comes true. And a lot of people stand to lose a lot of money if they get greedy and they don't do it properly. Does that make sense?
That definitely makes sense. So I have quite a loaded question for you. So a lot of people would go as far to say that it's an exceptionally speculative investment. And how can someone like a financial and investments advisor get behind something like that? I know that's probably sounds very loaded, and I know where you're going to go with this. But I just wanted to give you the opportunity to explain to people exactly what you do to mitigate the risk of losing everyone's houses, so to speak.
Yeah. No, I'm really glad you asked the question. And in fact, one thing that people should know is that I sold my investment firm in 2000. Well, I retired in 2009, moved to Aiken, South Carolina in 2011, planned to just live on my farm and live happily ever after, right? And in what, early retirement, until crypto came along. And it's the first time that I even thought about investing in years, because that's how interesting of an opportunity it is that I unretired for crypto. And it's not because I think people should invest all of their assets in it. And it's that the advice that I saw out there was so terrifying. But at the same time, the opportunity so compelling, which goes straight to your question, right? So how could a former financial advisor make that recommendation? The way I make it is by telling people, here's what you do. You only put 2% of your investable assets in crypto asset class, no more. And most people who want to invest in cryptocurrency hate that, right? Because if you're greedy, you want to, you think, oh my gosh, it's going to go to $1 million. I'm going to, mortgage my house or pour every bit of my IRA, whatever, right? That makes absolutely no sense. The way that you manage this risk and the fact that this is a very asymmetric, meaning there's a huge upside potential, right? But there's also the potential it could go to zero. So the way you manage that is by saying, I'm going to invest 2%. That's it. And if I put $10,000 in, $10,000 last year at 1,044% return would have turned into $125,000 last year. No guarantee that will ever happen again. No, we don't know, or that'll happen next year. But that's huge, right? Think of the difference that can make in Katie paying off your student loans, right? Like if you got that kind of a windfall, then you're pretty well set. But it could also go to zero. So by limiting that investment to only 2%, and only money that you can afford to lose, so that if you did lose it all, it wouldn't impact your future standard of living in any way, shape, or form. That's the rule. And that's how you manage such a lopsided upside downside skew.
Chainers, I'm one of the biggest advocates of diversification. And I would say that if you don't consider an asset class like this, you definitely could be leaving a lot of money on the table. And I think it's a perfect time for you to maybe tell us a little bit about your business, saying crypto. What exactly do you guys offer people?
Sure. Well, actually, what I do is I teach people how to invest in crypto assets, and very specifically, mostly, I'm really more about Bitcoin than anything else because I think that mitigates the risk. But what I do is I take people who are, generally looking to create a portfolio that they can live off of, in retirement, whether that's early retirement or at 65, it doesn't matter. That's the thing that we all invest for. And to say, okay, how do I make a sane and strategic allocation to cryptocurrency within, just like you said, within a larger, diversified portfolio? Where does it fit? And then specifically, how do I do it? Not only, the nuts and bolts of opening up an account and which wallet do I use and all of that sort of stuff, but then also, how do I manage that? Because it's one thing to say, I'm going to make an investment, but then, when do you get in? When do you get out? Those sorts of questions. So we've created a system around that for our clients, and we teach them how to do that.
Awesome. Chainers, we're just going to take a quick break, and then we'll dive right back into the Value Link round. Chainers, if you are interested in investing in Bitcoin, head over to chainofwealth.com/Bitcoin. There you can use our affiliate link that will give you $10 if you sign up and fill more than $100 into your account. So definitely grab the $10 for free. That's chainofwealth.com/Bitcoin.
All right, Kim, this is one of our favorite questions, but why do you think people struggle to achieve their dreams?
Oh,
another loaded question. We're full of them today.
Well, I've listened to a number of your podcasts, and I'm afraid that the answer I'm going to give is the same one that a lot of your other guests have given. It really, I think, comes down to planning and not making a plan. I do believe, just based on my own personal life experiences, that you just have to decide what you want your life to look like, and that you can make it that. But you aren't going to do it unless you start with the end in mind, which is a cliche, and make a plan and get there. And I don't think most people do that. I think most people spend a lot more time planning their vacation than they do their lives. And that's why they don't get where they hope to be.
I definitely agree with that.
I think you're very right over there.
So it was a good answer.
Awesome. So do you have any other books or podcasts you could recommend?
I do. I'll recommend two books. One investing and then one not. In terms of investing, I would recommend A Random Walk Down Wall Street by Burton Malkiel. I think this will give you the foundations for understanding some fundamentals about investing that will serve you very, very well for the rest of your life, namely that markets are random and that nobody can actually predict, and that the entire financial system is built on selling you this bill of goods, which is that, your mutual fund manager or broker can pick which stocks are going to beat the market, and it's just all a sham. And so it's an older book, but definitely one that if you have any interest in accumulating wealth, that you should read. The second one is The One Thing by Gary Keller, and I forget his co-author's name. I think it's like Jay Papasan or something like that. And I would say that The One Thing has probably been the single most influential book for me. If you're not familiar with it, Gary Keller was the co-founder of Keller Williams. And the book has, it's based around kind of this idea of one clarifying question. And the clarifying question is, what is the one thing, the single thing that if I did that first, right now, would make everything else easier or unnecessary? So it's all about really, the only finite resource we have is our time. How we spend our time will determine at the end of the day, right, the outcome of our life, that plan that we were talking about. And particularly if we are solopreneurs it really doesn't matter, but if you approach your time with that one question, it means you will always be getting maximum leverage out of the time that you spend. And that leverage compounded, just like compound interest, your time compounded in that way, can just have absolutely monumental impact on your life. And for that reason, I think this is one of the most powerful books that I can recommend.
Wow, I've heard of The One Thing, and you definitely have really sold it. I have to read it now. It's
amazing.
Yeah, well, and you also have a podcast as well, right?
I do, the Sane Crypto Podcast.
Yeah.
Yep.
Obviously you talk about crypto a little bit, but what do you talk about specifically? If any of our listeners do really want to learn about crypto and, just learn more information.
Sure. Really, it's an investing podcast wrapped up in cryptocurrency. So, I am a big believer in, this idea that almost everybody should have a little bit of cryptocurrency in their portfolio. But beyond that, I also believe that investing is a life skill for anybody who has any hope of retiring financially free, and that there are a lot of people out there who are feeding you with a lot of really bad advice because that's what makes them money. And so I try, while educating you about the case for cryptocurrency, to also make sure that the podcast is constantly giving you really sound advice on just investing in general, and more specifically investing for retirement, or which is just another way of saying that point at which you have enough money that you can do what you want when you want without having to worry about how to pay for it, regardless of how old you are when you achieve that. Because I believe that's your goal, to achieve that as quickly as you can.
That's awesome. And we'll definitely link to your podcast in our show notes page. So
great.
Any of our listeners can just scroll on down and then click over to your podcast.
Well, I'd certainly appreciate that. And I'd love to have people check it out.
Yeah, definitely. So Kim, do you have a favorite quote?
I do. It is from Zig Ziglar, and it's, you can have everything you want in life if you just help others get what they want.
I love that. Kim, we absolutely loved hanging out today. Do you have any other last parting piece of advice for our listeners? And then we'll say goodbye.
Parting pieces of advice. Gosh. I just to be thoughtful in terms of not swallowing. There's so much information out there in the world today, and most of it is self-serving for the people who are providing it, and so to just be critical in your thinking and think for yourself, and that would probably be it. I think that's a skill that's is kind of lacking here recently, and that people can improve their lives a lot just by doing that one thing.
I definitely agree.
Yeah, so do I. Fake news.
Yes, exactly. And you guys live in the heart of it.
We know.
We know. Chainers, we've been hanging out with Kim Schneider-Hughes. You can check out her business, Sane Crypto. Head over to sanecrypto.com and decide if investing in crypto is for you. There's only less than 5% of the total population invested. So it's not too late to get in if that's what you want to do.
And definitely check out her podcast.
Chainers, it's been a fantastic episode with Kim. And right after we finished recording, there was a great session that we had with Kim, just chatting a little bit off the record. But we thought that there was a lot of value, and we hope you enjoy.
Enjoy.
All right. So, Katie, you said that you almost understood. So, what part is unclear for you about cryptocurrency?
This magic internet money.
If I hear that phrase one more time.
Well, first of all, a little backstory. If you didn't know, I'm super new to investing. Denis is still kind of peer pressuring me to sign up for Robinhood Gold. So I'm uncomfortable just in general. I know this probably sounds really ridiculous to you, but investment, I feel is so risky. And talking to my mom now, my mom did invest money and everything, but I kind of always just thought she stashed money in the bank and just left it there. And so I didn't ever really learn about investing until a year ago. And so between my apprehensiveness with investing, and then I struggle to really understand, I don't want to say the concept, but I struggle to understand the technology of it.
Mm-hmm.
So the whole, I don't know. And then I don't know enough personally to be able to weed out people who know what they're talking about and people who don't know what they're talking about.
Right.
I know that don't know, so I don't want to go in and make a wrong decision. And I know like if I only invested like a couple $100, that's not the end of the world. But yeah.
Mm-hmm. Yeah. Okay. I'm with you. And yeah, it's interesting because one of the, again, things that I believe, which is a little bit different than other people, is that you really don't have to know very much about this stuff to invest in it. And yet I can see where, like, you have to understand the investment premise, but not necessarily how it works. In the same way that you don't understand how your car works, right? But you still buy a car. You just know it gets you from point A to point B, then that's its job. And that, but to your point, one of the things that really concerns me is this trend, I guess, or this fact that most millennials don't invest in the stock market.
Yeah,
you guys doing that?
It is so scary. Like,
is that true?
Honestly, like I am basically studying CFA. I'm doing level 2 at the moment, and I
good for you.
Cringe when I chat to people and I hear like stats like how few people are investing. It just, what's going to happen when they need to retire? You know?
There's no way that you can accumulate the kinds of money that you need to be able to retire.
Yeah.
Without investing. You must. That's why I say it's a life skill.
It's crucial.
And you have to do it really early. You know, and so like, what are all it's just somehow something's gone awry that you have a whole generation that doesn't know how to, isn't investing.
Do you know what I think the problem is? I think it stems from the student loan issue that we have. And I would go as far to call it a crisis, because that's exactly what it is.
Well, yeah, because I don't want to lose my $500 that I could invest because I want to pay off my loan.
Yeah, like, so I think millennials as a whole are plagued with student loans that are like historically astronomically higher than what they were like 30, 40 years ago. And obviously even before then. And, you know, so people's extra money is sort of just going to stay afloat, really. And I think that it's not something that's taught well enough as well. Just general investing and money principles, like budgeting. Such a simple concept. And I feel like, why are we living in a society where that's not taught at school for like at least 5 years, you know?
Well, and when I was teaching, like I had a bunch of teaching friends, and, you know, we would all we wouldn't talk about our money, but we would talk about our lack of money, how we were so broke, and none of them were investing from what I knew of. I definitely wasn't. I think I lived with Denis for 6 months and watched his stocks gain value and everything until I was like, all right, I will put $50 in. And that's how it kind of just started. And now I'm actually regularly contributing to my stock, so that's pretty exciting. But like, it's such a like uncomfortable and unfamiliar thought process, I guess, for me. Like, I always just kind of thought, and I also like a year ago just left thousands of dollars in my bank account, because where else are you going to put it?
Huh.
So, and I think that's if you don't have a financial like education or any kind of interest, I think that's what a lot of people are doing.
But, you know, here's the thing. So I'm going to sound old now, but, you know, one thing I don't get is, so if you listen to some of the speeches that I used to give, I give that very speech, right? Because you guys probably don't know my backstory, and we didn't talk about it, but I made tons of money before the age of 30 in an IPO. I just happened to be working for a company, right place, right time. Well, part of it was me, but anyway, I made a ton of money and I didn't know anything about investing either. Right. And so I turned all that money over to a stockbroker for Merrill Lynch, who, you know, quit my job, had a really good time. 2 years later, they had lost literally everything that I hadn't managed to spend. My phone rang one day and they said, sorry, Miss Snyder, your money's all gone. And, you know, the speech I give is like, how is it that I went to the finest schools this country has to offer. I learned all these ridiculous things like how to speak French and, business law in high school. And yet nobody taught me about money. Mm-hmm. Like that was crazy. So my generation, which is the baby boomers, we didn't learn about money either. And yet the baby boom generation, for some reason, invests where the millennials aren't. And I never really thought about the student loan thing, although, I know about it. Obviously, it's a massive issue. But I didn't think of that as being the reason why you guys might not. But it seems to me like it's more of a mindset thing, like where you like, I don't know. It's just not even on the radar in a way. Is that accurate?
I think people just, if they're not in that kind of environment, they don't really think about it. I don't know. And like, you're right. My mom is also a baby boomer, and talking to Denis, I've heard her like throw out words that I've never heard her mention before. And I was just like, wait a minute, we had a conversation the other day. You thought penguins flew in the air, but you're somehow talking about all this kind of investment strategy and everything. Like, where did this come from?
Isn't that interesting?
It really is. But like my entire life, I thought she just had money like sitting in her bank account and that was it. And now, as it turns out, as we started talking about the podcast and she's asking what we think about certain things, I'm just like, oh, wow, you've been investing all this time. And I always kind of thought investing was like a really, really risky thing to do instead of what you should be doing.
Yeah, it's risky not to. And you have to. You have to. Over your lifetime, you're going to have to get roughly 10% return over time, which is made up of ups and downs. Right. Denis can tell you this. He's right. I'm sure he has, but over your lifetime, right. Somewhere around 10% to get to the sort of number that, to be able to live 40 years in retirement. And that's assuming 40 years by the time you guys get to that age. I don't know exactly how old you are, but, I think you said you're 29 or something, you guys may be having to live 60 or 70 years in retirement, that's just, it's a crazy big number that you have to get to.
Yeah. And the fact that there's probably not going to be any Social Security.
Yeah. Which is not that much anyway, but.
Yeah. Well, I think people our age are just kind of putting it off and hoping for the best. And I know people put into like their IRAs. And when I was teaching, I had all kinds of savings accounts. Like people would come, they would come to the school and they would ask if we wanted to open accounts. And I did. And I would put, $40 or $50 a paycheck in all these different accounts. But I didn't really, I didn't know what I was doing, but I knew I should be saving money. And I think that's what people do. They just kind of blindly are like, okay, well, I'm supposed to save money. I'll put it in this 403B or I'll put it in a Roth IRA or something like that.
It's better than nothing.
Yeah.
Not as good as knowing what you're doing, but it's better than nothing. Yeah, it's interesting. I won't keep you guys any longer, but it's almost like since I'm primarily focused on the baby boomer audience, it's almost like there's the exact opposite problem. Like, so the baby boomers, they all do invest. They have been investing at least most of them. And, but they look at cryptocurrency and think, ooh, that's too risky, which that's just wrong. But anyway, and whereas generally if millennials are investing, my understanding is that they invest in cryptocurrency, but they're just putting way too much in, so it's just kind of two different audiences are approaching the topic in very different ways.
Yeah, and you couldn't be more right. I have a friend who's got like $50,000 in crypto right now. And he swears by it. And I'm just like, dude, that's too much. You need to be diversified.
Yeah. Stocks, bonds, commodities, real estate, REITs, all those things, plus a little tiny bit of Bitcoin. Crazy.
Yeah, it's insane. But I honestly think that chain of wealth has probably been the best thing that happened to Katie from a financial perspective.
Oh, absolutely. I was a financial train wreck a year ago.
Yeah, they always say if you want to get good at something, immerse yourself in something. And
All right. As always, I hope you found that helpful. If so, you could do me a great big favor in return, which is 1, to subscribe to the podcast so you don't miss a single episode, and then 2, leave us a 5-star rating and review with comments and feedback, which tells iTunes to show us to more people so that more people like you can find us. Now, I thought this would also be a good place to answer an Ask Kim question that was sent in after one of my free online training programs. Michael says, quote, I know it seems you are seeking the baby boomer demographic that are at or near retirement. The question I have is, are we a good fit to work with you based on our situation? And then he went on to, outline the fact that he's early 40s, 40 actually, married, both with really good jobs, ex and retirement savings, etc. So leaving the suitability question out, I just wanted to address the investing for retirement angle. I also referred to this idea very briefly in my interview with Katie and Denis. So to that, I replied, quote, baby boomer is really just a dog whistle for those who want to achieve or ensure financial freedom from work at a point in the near future and have the sophistication, wherewithal, and motivation to pursue it. To be honest, my program is just as applicable to a new college graduate wanting to save for retirement. But most, meaning those younger new college graduates, just aren't thinking that far into the future yet, for reasons that we just discussed with Katie and Denis, right? And the ROI on a paid mastermind just isn't there if you're only investing, $500. If you'd like to jump on a call to discuss further, I'm happy to do it. Warmest regards, Kim. So again, the point being that retirement at 65 is this very arbitrary concept that we came up with back when people worked their entire lives, quit when they couldn't work any longer, sat on the front porch a few years, and then died. To me, retirement is that point at which you are financially free. You can do what you want, when you want, without worrying how to pay for it. And for some people, that may very well mean continuing to work. So, right? So it's really about the financial freedom as opposed to, the gold watch, right? Or not. But to reach that point, as quickly as possible so that you are in control of your own destiny rather than relying on friends or family or the government is the goal for every single portfolio. And the people who understand that and are earnestly working toward that are the people I can help. The age thing is just shorthand. So speaking of which, if you'd like to learn more about investing in crypto assets for retirement and my system for doing that, you should register for my free online training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further at sanecrypto.com/retirement. And finally, you can get the full show notes of this episode at sanecrypto.com/podcast, including links to additional resources that I think do a good job of explaining cryptocurrency for those who are maybe more visual or kinesthetic learners rather than auditory. Again, the free training is sanecrypto.com/retirement, and the show notes are at sanecrypto.com/podcast. And finally, if you have I've said finally before, haven't I? This really finally, if you have a question about today's topic or anything else, just email me at askkim@sanecrypto.com, just like Michael did. I read and answer every email personally, as well as answer some of them here on the show. Everything I say on this show is for educational purposes only. Nothing should be considered investment advice. Past performance is no guarantee of future results. All investments involve risk, so do not, under any circumstances, invest money you can't afford to lose. That's it for me. I'm Kim Snyder. I'll be back next week. Until then, may the crypto gods continue to smile on us all.